Welcome to S&P's European loan market video overview detailing leveraged finance trends and activity during October 2011. I'm Suchit Gupta, a member of S&P's Leverage Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in November and early December 2011. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the almost 6,700 contacts in LCD's Leveraged Loan Group on LinkedIn. The links to follow LCD are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. Before getting down to business, some fine print. This disclaimer, courtesy parent company Standard & Poor's and McGraw-Hill, covers all the bases. Please read it at your leisure. After September's dismal performance, the market did a little head fake in October. The anticipation of a solution to the sovereign travail provided the market with a little uptick in October. The secondary loan market finished the month up 151 bips at 94.17, while the high-yield bond market finished the month up 830 bips at 94.10. The ascending secondary market did help those banks that launched deals to the market. Loan issuance stood at 5.2 billion euros for the month, while high-yield bond issuance stood at 0.6 billion euros. The S&P European Leveraged Loan Index, the LE, had a positive return of 1.73 ex-currency for the month of October. Banks launched and closed some of their overhang during October, but the syndicates were not as broad as they used to be, and they're far more club syndicates. The high-yield market remains closed to all but crossover 4B type credits, though you did have one 2B senior secured bond, but that was only placed with a small club of investors. Default rates, however, are starting to climb upwards. It's not surprising given the weak economic outlook across most of Europe. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 14 largest, most liquid loans consisting of 10 issuers since 2002. The flow names rose 151 bips to close the month at 94.17, still 333 bips below where it was at the end of the year 2010. This next chart details the average price of LCD's European High Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. The high-yield market gained 830 bips during the month to close the month at 94.10. This next chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise noted. The European loan market posted a positive return of 1.73% for October, up from the negative 1.95% seen in September 2011. For the year-to-date, through October 31st, the LE has returned a positive 0.73%. However, for the same period last year, the LE returned a positive 6.57%. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. New issues for leveraged loans during the month stood at 5.2 billion euros. Arrangers launched several deals to the market as well as closed them, but most of them were placed with a handful of investors and the syndication wasn't as wide as it was in the past. High-yield bond volume stood at 0.6 billion euros from 3 issuers, of which 2 were 4B issuers, while the remaining one was a 2B issuer that places bonds with a handful of investors, almost like a club deal again. Given the weak economic outlook, default rates have seen an uptick in October. The default rate by principal amount now stands at 3.91% at the end of October from 3.79% in September 2011. The default rate by issuer count now stands at 2.99% compared to 2.59% at the end of September. In summary, the fallout from the sovereign risk contagion shows no sign of abating. As confidence weakens in the broader capital markets, there's still a lot of uncertainty about sovereign defaults/downgrades and what its potential knock-on effect would be on the broader economy. The high-yield market is all but effectively shut down for all but 4B/crossover credits for now, or those issuers that can place their bonds with a handful of investors. Given the lack of clarity on the overall market, investors are extremely reluctant to commit to any new transaction, though some are selectively taking down risk in the secondary. Arrangers are still hurting from their hung bridges, and the overhang from the summer underwrites are now somewhat pulling back from arranging/underwriting any new deals, except for club transactions which are already placed with syndicate members. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.